Teresa King, Managing Director of AB's Equities Business. Hi, Teresa. Thanks for being with us in Negocios TV. It's a pleasure. Have you here. Thank you so much.
Thank you very much. Good afternoon. A pleasure to be here as well.
It's a pleasure having you here. Teresa, I would like to ask you about the equity markets. Are we seeing similar trends? Equity markets performing in maximum this year. Are we seeing similar trends in this time?
I think we are, to be honest with you. Global equities were up over 20% last year, which was really positive. And so when I talk about global equities, I mean MSCI World broadly. In fact, global equities outpaced US equities, which delivered still good returns, 17.9, 18% generally. And of course, the leader last year was very much Europe and emerging markets. We are seeing a similar trend this year with emerging markets also performing really strongly, as well as European equities. Non-US equities in particular, as measured by the MSCI EAFE, are also doing well. And then when it comes to style, what happened last year was that quality lagged growth and value. There was very little gap in terms of performance. And so all in all, what's happening this year is that we're seeing value strongly performing. And this is data through the end of yesterday, and quality has rebounded all in all. So we are seeing overall, I would say, similar trends to last year as a whole when we look at the various asset classes and the how regionals are outperforming the US in general.
And Teresa, we saw a strong performance from speculative assets and the performance of quality. Can you comment, and also what is the long-term view on these quality investings?
Yeah, last year we did see quality underperformance. It was quite significant. It's certainly been the most that we've seen in 20 years. Unfortunately, we saw speculative growth outperforming. And by speculative growth, we mean those companies that are in the bottom 60% when it comes to profitability. They're in the bottom 60% when it comes to valuation. That means they're expensive, but also the top 30% when it comes to sales growth. And so we experienced that type of situation last year with low quality companies really outperforming high quality companies. And that was really pervasive across sectors. It wasn't just any one sector or industry. It was really across several sectors and industries. So for example, within tech, we had the likes of CoreWeave really outperforming what's arguably the best software company in the world, ServiceNow. We have within financials, we have crypto outperforming, what we would consider really high quality, solid financials, the likes of the exchanges, for example. Quality over the long term is a very stable factor. It does outperform, and it does show that consistency and deliver that consistency over the long run. And that's certainly what we're looking for in order to deliver those returns to our clients as a whole. And then it was exactly that question that we were asked with regards to what's the sustainability of quality over the long run. So we did research at the end of last year to look at that exact question. And when we take a look at quality versus speculative growth, for example, it does outperform speculative growth. Outperformance is around 3% versus speculative growth, which is negative. And of course, we would expect higher quality companies to be less volatile than speculative growth, for example. And there we're taking the standard deviation of monthly returns. And you can see there that speculative growth generally has that volatility of 18.1% versus quality as a whole, 14.2%. So yes, we do have conviction in quality going forward, and we're continuing to invest in high quality companies. So yes, we're looking for that solid profile of company going forward.
And Teresa, I would like to ask you about your current position. How are you positioned today?
So in terms of our positioning, it hasn't really changed that much, I have to say. We're still underweight the US. I mean, the US still offers exceptional return potential in the form of innovative, very high quality companies. But we have had, and we're still experiencing that very concentrated market environment. Valuations are soaring. And actually, if we look at the data and the trailing, the left-hand side of that chart shows you that volatility, and US companies are actually 60% more volatile than non-US. And actually on the right-hand side, what you can actually see is that the US, or should we say non-US, are trading at a significant discount to the US right now. And that discount is around 50%, which is quite a discount. The same with European companies. And we're looking at, that's a discount on a price to free cash flow ratio. And why we're doing that is because that's one of our metrics that we include in all of our models. If we included emerging markets on there and look at price to earnings, it would be around a similar 35% discount when we're looking at relative to the US market as well.
Teresa, everybody is talking about AI. What are your thoughts about AI, and how are your analysts assessing these kind of companies?
Yes, it's certainly been a big theme, and certainly driven returns. There's no doubt about it, both by the high quality mega caps as well as the low quality speculative growth names. And I think it's for us as an asset manager, there will be winners and losers. And the key questions that we're asking with regards to being on the ground is, what's the value proposition? So in terms of the types of data that company is using, are they reliant on publicly available data, or do they have a proprietary moat? Because let's face it, if you're reliant as a company on that publicly available data, then there's going to be some vulnerability there. And then on monetization, the question is really, is there an AI upstart? If there's more AI upstarts, then clearly there's going to be, again, some vulnerability. We have assessed and ranked our companies based on this type of framework and have sold out of some positions based on that. Clearly, we want to be in the winners and sell out of those that we believe that are going to be challenged in this type of environment. There's no doubt that we are in an innovation cycle where we are today. Yes, there is a lot of spending, but at the same time, we do have to assess our positions and in terms of who we think are going to be losers and who are the winners. And we take active decision-making based on that. And in terms of who we're seeing as winners today, in terms of should we say, AI infrastructure, we're finding opportunities not only in semis, but also in power management, and also in power transmission. We like the Prysmians of the world, for example, that's really benefiting from electrification. That's the offshore Italian cable company that does that link. And then, of course, we're finding NextEra all about power generation and, again, power transmission. So there are several themes that are going on. And of course, if you look at the emerging markets, again, this theme is very much there. And you have companies like SK Hynix, for example, Samsung Electronics, who are leaders in the memory space. And of course, they're trading at very attractive valuations versus some of the US mega caps, for example. So we're finding opportunities both within DM and EM across this particular theme. But it's very essential for us as an active asset manager to find these winners and losers using our quantitative and fundamental research in order to do that.
And Teresa, the last question, what is your focus in this year? We are talking about AI, we are talking a lot about gold. What is your focus this year?
Well, as a manager and defensive core strategy, we're continuing to very much focus on quality. We're focused on finding those resilient, durable business models that's going to deliver that return over time. We're not going to change our philosophy, our approach. It's very much tried and tested over the past 15 years. We're certainly monitoring AI volatility, as I said, using our framework and going deeper and deeper with regards to, let's face it, we've seen many disruptions before. In the past 15 years, we've seen many companies that have been disrupted and they have succeeded. So we hope to see that going forward as well. And then clearly we're casting that wider net for a broad range of companies, investing on finding that resilient set of companies, regional diversification, attractive price, very important in delivering that upside participation, less risk over the long term for us as an asset management business.
Well, this year, looking for the AI, Teresa, thanks for being with us in Negocios TV. It's a pleasure having you here. Thank you so much.
Thank you very much.
Thank you.
Thank you.
Good day.
Bye-bye. Bye.